And how Goldman Sachs framed it the other day, talking about a, quote, wall of money coming in, but not really until July, that you could have some selling between now and then, but that the beginning of the third quarter and thus the second half of the year is the area to really plan for a wall of money coming into this market and then pushing stocks that next leg higher.
Scott, that dynamic is certainly at play for a couple of reasons. One, April was a down month, and I think a lot of institutional investors actually sat out May thinking April was the start of a bigger correction, so June is when money starts coming back in. But I think more importantly, since the end of 2022, I think a lot of institutions and a lot of high net worth individuals sort of sat out this market saying, hey, I'm happy earning 5%. By the middle of this year, if the S&P is up 15%, on top of missing 30% last year, I think a lot of folks are going to say, listen, I can't just sit on cash and earn 5% anymore when I'm missing out potentially on a 25% year for the S&P.
Tom, what'd you make of the fact a couple times this week we had rates go down and stocks go down? Not exactly the dynamic that many had been expecting, right? Because that's not the way that stocks and rates have been reacting, right? They've been pretty well correlated. Rates down, stocks up. Well, there were a couple of occasions this week where that didn't work. Why?
It's kind of hard to tell, especially day to day. But if I had to guess, we don't want to be in a situation where the economy is slowing so much that we've actually hit stall speed, so rates would go down. That type of economic dynamic would scare stocks. So it's almost like bad news is too much bad news. In fact, maybe that's why today's jobs report kind of fits right in the middle, because it's actually good enough to tell us the economy is still strong, as you said, but it's not enough to actually add to inflationary pressures.
Tom, what if this market is just screaming out it's Nvidia's world and we're just living in it, right? I mean, if Nvidia's up, markets are good. Nvidia's not doing much. S&P can't do that much. Nasdaq's negative today. It's a one-stock story.
Nvidia is really a generational story for now, because how many $3 trillion companies actually have doubled, so clearly Nvidia is important, but it's important because it's really one of the most important ways to get exposure to AI. And I think the AI story is, early innings, as many people talk about. It's transformational in terms of productivity, and there's a lot of use cases developing. So as much as it might feel like a one stock market, as you know, there's a lot of stocks up more than 20% year to date. And I actually think breadth is likely to increase. So for investors, there's a lot of opportunities in the second half.
Nvidia's stock soared by an impressive 4.5% at the close of Friday's trading. Imagine a company whose performance is so dynamic that it can make even the most robust market indices, like the S&P 500 and the Nasdaq Composite, seem like they've had a leisurely day with their respective gains of just 1.2% and 1.7%. Nvidia, the undisputed trailblazer in artificial intelligence, AI technology, found itself propelled by groundbreaking news from none other than Microsoft. Naturally, several compelling questions hang in the air. What precisely is Microsoft's mysterious AI infrastructure investment for 2025 that has sent investors into such a frenetic spin over Nvidia? Is Nvidia's stock, already having surged more than 200% within a single year, truly a golden ticket to potential profits waiting to manifest in 2025? Clues point to colossal implications for the graphics processing units, GPUs, that form the indispensable backbone of AI advancements. But as any insightful mind would agree, let's explore these developments more thoroughly before unveiling the complete picture that may chart the course for Nvidia's future. Welcome back, everyone, to Investocracy.
For a look at what's ahead this year, we want to welcome Gene Munster, Deepwater Asset Management Managing Partner. And Gene, let's talk this through. Okay, so up incredible amounts for this year, biggest market cap out there. What is the anticipation for this coming year, for 2025? You think that this money is still going to be good? Is there still going to be the huge amount of demand? Can they continue to just rake in the cash that they've been able to do to this point?
Specific to Nvidia, yes, I think this is going to continue. I think that the growth rates are going to remain higher for longer. Specifically, the focus is on calendar 26, what that growth is going to be. The street's expecting low 20% growth. I think it's going to exceed 30% growth. And so this still trades at a reasonable multiple, a 25x multiple, and kind of plays to what I think is going to be the chorus in 2025. Obviously, NVIDIA being at the center of the AI trade, I still think we have 2 solid years left of a strong tech trade here based on AI. And I just want to quickly fill in the point, Becky, that probably seems out of touch with reality, just given the 87% move we've seen in the Nasdaq over the past couple of years. How is it possible that this can continue? And I come back to, for most people, the concept of AI is a buzzword. And I put in the context that if you look at ChatGPT, the daily users, it's only about 150 million. That compares to about 2.5 billion Google users.
If one were to spin a captivating tale about NVIDIA's unstoppable momentum, Friday would most certainly serve as an exhilarating plot twist packed with intrigue and thrill. Picture this. Microsoft, a titan in the ever-evolving software world, is conspicuously ramping up its AI data center investments with a jaw-dropping budget of $80 billion earmarked for this year alone. But wait, there's substantially more. 2025's spending is primed to leap by at least 51%, a truly astronomical figure in the realm of technology investment. Such staggering numbers naturally align with the meteoric rise of NVIDIA, Microsoft's leading supplier of advanced GPUs. In a world where their cutting-edge silicon innovations power the promising future of AI, it's no surprise that NVIDIA commands a staggering 80 to 90% market share in the AI chip segment. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
It does raise questions about what NVIDIA is going to do with all that cash that it's bringing in. What do you think the best answer would be?
I think probably return it to shareholders, share buybacks. I mentioned that valuation at 25x. I think it's quite compelling. And so I think that that's probably the easiest way. They don't need to make any acquisitions at this point. So I think it's probably on the typical well-traveled path of share buybacks, dividends. We probably will see something along those lines we almost have to in calendar 25 for NVIDIA specifically.
Gene, I'm just looking through your disclosures. You don't own NVIDIA. Why not?
Personally, I don't own NVIDIA. Our firm does. Deepwater does own NVIDIA. And the reason why we own it is at the end of the day, I think that the obvious trade is still in play here. I think there's a lot of anticipation that this company's growth is going to slow dramatically. But some people even think it may even decline in calendar 26. But as I mentioned, I think that we're still early in the AI build-out phase.
With Microsoft's vice chair and President Brad Smith fanning the flames of speculation in a tantalizing blog, it becomes emphatically clear that NVIDIA is not just buoyed by speculative enthusiasm. It is solidly underpinned by concrete, compelling data. Delving even deeper, NVIDIA's ties to Microsoft herald an incredibly promising horizon. Tech advancements necessitate stronger, more robust hardware infrastructure, and NVIDIA finds itself at the very heart of this industrial revolution, consistently outpacing contenders in delivering the essential GPUs. They are perfectly poised to ride the crest of Microsoft's monumental investment wave. Validated by historical precedents and fortified by forecasted growth, NVIDIA stands poised not on a precipice of uncertainty, but rather as a champion in waiting, especially as infrastructure spending blooms into fruition. For the curious yet strategic investors among us, the roadmap towards robust growth is practically tangible. A road where NVIDIA promises not only immediate gains, but also enduring stability and success. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
You do personally own Apple and Tesla. Why not NVIDIA if you are if you have such conviction on it?
I think if I was going to kind of force rank those three, I don't do, first from just the highest level. I have very few companies in my personal account, and so I don't think it's necessarily an indictment against NVIDIA.
Sure.
It's more just related to my conviction around Apple and Tesla.
So the Apple and Tesla are still your highest conviction stocks because those are the ones you own too.
Yeah, for the long term, and I have the benefit to own things for 5+ years. I think it's worth mentioning. We'll get the Tesla numbers here momentarily. I do think Tesla is due for a pullback here. I mean, we've had some incredible, of course, $700 billion in gain over the last 3 months in the market cap. That's just not sustainable. But I think that what they're doing around AI is going to ultimately drive the market cap higher. And when it comes to Apple, I think the iPhone is going to grow closer to 8% for this coming cycle, and the expectations are for 3%. So that's where my conviction comes from.
As we cast our gaze forward towards Nvidia's future amidst the relentless march of technological evolution, it's abundantly clear that this AI stalwart transcends the temporary anxieties often associated with cyclical business patterns. Riding high on a wave of concrete data and boundless optimism, Nvidia's stock continues to remain exceptionally appealing for the discerning long-term investor. Signals point towards an excitingly bullish landscape as demand for AI infrastructure hardware seems set for unprecedented expansion. With such momentum unequivocally bolstered by Microsoft's ambitious spending plans, Nvidia confidently emerges as a compelling contender for investors seeking formidable potential within the domain of technology stocks. So, what does this all-encompassing narrative mean for those with their keen eyes set on Nvidia stock? As one of the prime beneficiaries of AI's projected growth trajectory, Nvidia promises not only to fortify investments but to propel them forward with futuristic prowess and vision. Indeed, this presents a singular, golden question. Are you ready to invest in Nvidia and join the dynamic maneuver towards an inspiring, AI-driven future? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.